是某某平台的 IB 吗？
我常常听身边的顾客朋友说，做 IB 的都是很轻松的工作，不是去打打 golf， 就是去和客户喝茶，就能赚到可高达5位数的收入了。
我只想说，你只看到了一部分的事实。我认识的一些 IB， 他们的平台都没有提供很多的 support 给他们的自家 IB， 有时被客户问到 signal 或市场分析，他们还要去其他平台买 signal 提供给客户。
而我能够把我 IB 的业绩一直保持并持续成长，选择一个能帮助你发挥的平台，绝对是最重要的决定。毕竟选择比努力重要。在 VC Forex Capital， 你和你的客户可以交易到的产品有外汇、贵金属如黄金、原油、虚拟货币、指数和超过400个美国股票。而且公司会提供的 support 有每周至少2次的线上课程、Telegram 信号群、每日市场分析，还有6月开始，我们会有著名的市场分析师兼 YouTuber 开用，为你和你的客户提供线上直播，为你现场分析市场，现场带单。最重要的是 Forex Capital 是一家成功获得美国期货协会所颁发的 MFA 牌照，让你和你的客户可以安心的把资金投资在这里交易和建立你的 IB 团队。如果你有兴趣了解 VC Forex Capital 的 IB 优惠，近日我们会在柔佛新山有一场 Forex Capital 的线下 IB 招商会。现场我们也会提供红酒给大家，让我们一边品尝红酒，一边讨论如何把你目前的业绩推上更高峰。点击下面的链接，我们会有专人联系你。我们到时见。
你是某某平台的 IB 吗？
我常常听身边的顾客朋友说，做 IB 的都是很轻松的工作，不是去打打 golf， 就是去和客户喝茶，就能赚到可高达5位数的收入了。
我只想说，你只看到了一部分的事实。我认识的一些 IB， 他们的平台都没有提供很多的 support 给他们的自家 IB， 有时被客户问到 signal 或市场分析，他们还要去其他平台买 signal 提供给客户。
而我能够把我 IB 的业绩一直保持并持续成长，选择一个能帮助你发挥的平台，绝对是最重要的决定。毕竟选择比努力重要。在 VC Forex Capital， 你和你的客户可以交易到的产品有外汇、贵金属如黄金、原油、虚拟货币、指数和超过400个美国股票。而且公司会提供的 support 有每周至少2次的线上课程、Telegram 信号群、每日市场分析，还有6月开始，我们会有著名的市场分析师兼 YouTuber 开用，为你和你的客户提供线上直播，为你现场分析市场，现场带单。最重要的是 Forex Capital 是一家成功获得美国期货协会所颁发的 MFA 牌照，让你和你的客户可以安心的把资金投资在这里交易和建立你的 IB 团队。如果你有兴趣了解 VC Forex Capital 的 IB 优惠，近日我们会在柔佛新山有一场 Forex Capital 的线下 IB 招商会。现场我们也会提供红酒给大家，让我们一边品尝红酒，一边讨论如何把你目前的业绩推上更高峰。点击下面的链接，我们会有专人联系你。我们到时见。
Alright, good evening. Hey, welcome to a new week. Hope you guys are had a great weekend and well recharged. That's what usually we do over the weekend, right? Kind of like get a clear mind, refresh, relook at the market, and then we'll start the new week. Okay, so welcome for those of you who are perhaps new, first time joining in. Let me quickly share with you the overview what we're gonna do. So usually what we'll do is I'll share with you the big picture, the overview of the week. What are some of the events you want to take note of that might create some kind of volatility in the market or even opportunities. After that, we'll look into the technical charts to share with you some of the opportunities, some of the key levels that you want to keep an eye on. Okay, and of course, if there is a short-term opportunity, then I'll bring it up as well, and then you guys are aware of it and you are able to trade it along the way. Okay, so we'll be looking at a couple of markets, including indices, commodities like gold, oil, as well as FX. Okay, but of course, trading various instruments require different margin. So of course, then your capital would require different amount as well. So for all this understanding, my suggestion is if you're unaware, do talk to your account manager. Okay, so with that, let's get started. And of course, if you have questions along the way throughout this sessions, just feel free to type it into the chat. I'll be able to look at them and answer your questions. Or let's say if you're looking at any particular trade, you'd like to have a second opinion, okay, from my perspective, feel free to also type it in and I'll be able to look at them together with you. Okay. So let's take a look at this week. Monday, yesterday is the US bank holiday, so which means that the stock market is closed. And most of the time when that happens, the FX market are gonna be a little bit quiet as well, which is what we observed and what we experienced yesterday. Not much of a move. This week here, if you compare relative to last week, it's actually a little bit quieter. Okay, so you can see today nothing much. We have already some of the data that came in, Canadian side of things. Moving forward, tomorrow we have the pound CPI year on year. This is going to be important. Okay, you can see inflation has already hit really high. So do take note, because if the data comes in like 9.1 or even higher than that, then we are going to expect the Bank of England to continue being hawkish. Hey, last week we talked about fundamentals, right? How to understand the central bank. So if let's say inflation on the UK side comes in very high, Bank of England is going to be continue being very hawkish, and that means that from a fundamental perspective, you want to look out for the pound, okay, to strengthen. The opposite might be true. So if let's say inflation year on year come in tomorrow is not that great, okay, maybe it start to drop a little bit below 9, then we might start to see maybe a little bit of a weakness on the pound, right, from a fundamental point of view. Okay, so that's one. Other than that, there's not much of a news anymore that you really need to pay attention for the week. Okay, so that's why I say this week relatively quiet. Does that mean that there won't be any opportunities? Not necessary. Okay, it's just from a fundamental risk event point of view, there's not much happening. Okay. So with that, let's take a look at the indices first, right, as a major overview of the financial market. Then we'll take a look into the dollar index and we'll look into the major pairs. And then I'll share with you what are some of the opportunities that I'm personally looking out for. Okay. If you have been following the equities market, I think it's not surprising to you that we are currently in a downtrend. And recently, of course, depending on which one you track, whether it's the Nasdaq, Dow Jones, S&P, or whatever, we are basically what we call in a technical bearish environment. Okay, so if I put in this channel over here, we can see that the market is currently respecting a very nice downward trend, and at this moment, we're kind of at the bottom of the channel. Okay, so usually, you have this saying, right? Don't sell into support. Don't buy into resistance. Okay, essentially what it means is that if let's say we have this downtrend here and the price is basically at the bottom of it, you don't want to sell it at this level, okay? Because there's a good possibility we might see a little bit of a bounce just like here, okay, just like a bit here or here. It may not be the transition to a bullish market, but it might be just a technical rebound and you don't want to sell it, at the bottom. Okay, so from an equities point of view, I would say short-term wise, you might want to look out for maybe a little bit of a short-term bounce, buy opportunity on the indices. Okay, so this includes of course S&P, Nasdaq, Dow Jones, or if you are looking at specific CFDs, okay, short-term maybe within this week, next week, within 1.5 weeks period, right? You can actually look for buy opportunities. Okay, not long-term, but short-term buy. Okay, so that's on the S&P side of things. Of course, if I bring in a little bit of a shorter term time frame, okay, you can also start to see we have this what we call a divergence building up on the 4-hour time frame, okay, where the market actually made a low, but the RSI of course did not do that. Okay, so you can see over here the RSI actually made a higher low, right? So again, this usually indicates a little bit of what we call lack of momentum, divergence, and usually indicates a reversal coming, right? So you can see the previous one, we have that as well. Okay, and what happened next was the market rebound, right? So this is something that can happen over here. Okay? Not a huge one, but as I mentioned, short-term buy. Okay, so something you can keep an eye on in the overall market. Again, this principle of looking at multiple markets, which what we call inter-market analysis, is important because each market would have kind of like an effect on the other. So if let's say we are looking at equities buy, okay, so equities, if let's say we are slightly bullish this week, okay, what this means is that if you look at Aussie plus New Zealand currency, there's a good chance we're gonna see bullishness, okay, in these two currency as well, because of what the intermarket relationship is. And if you take a look at the yen, then of course we'll be slightly bearish on the yen. Okay, that is how the market tend to have this kind of relationship. Okay, so why looking at the overall bigger broader market is important. Okay, so later we'll look at Aussie, New Zealand, and of course yen. I think the yen is already moving. Depending on your strategy, for me, I have like 2 yen trades running right now. We'll talk a little bit later on. Okay, so that's the big market in terms of the S&P. Let's take a look at the dollar to give you an overview as well. Okay, so if you follow us last week, I can also share this. Generally, nothing has really changed much since then. I think right now is not the best time to be buying dollar. Okay, from a technical point of view, yes, fundamental. The dollar might still continue to strengthen, right? For the next maybe 6 months, 1 year, because the Fed is essentially still hiking rate. Okay, it's still very hawkish. But from a technical point of view, we might see a little bit of a pullback first, okay, maybe towards the previous bottom. So I don't think it's the best time to buy now, but if you're trading short term, you want to focus on selling the dollar at this moment. Okay, so the dollar index can give you a big idea as well. If you go down to the 4-hour time frame, okay, one potential technical pattern to look for sell opportunity in the dollar index is a double top. So you have this top here. If this continue to go up a little bit, that can give you a double top formation for that short-term trade back to the bottom over here, right? So in terms of level, the next target is somewhere around 101.30. Okay, so our view for this week, and I would say even going into next week, if all goes according to what we have anticipated, then we're going to be bearish on the dollar. Okay, so what does this mean? If you're bearish on the dollar, means if you're looking at a major like euro dollar, pound dollar, Aussie dollar, Kiwi dollar, you want to be bullish on them, okay, because you want to be looking at selling the USD. Okay, so again, looking at a big picture like dollar index is important because it gives you an overview of the direction and the bias that you want to adopt. Okay, so I see a question over here. Someone asking which RSI indicator am I using? It's actually the default setting. Okay, it's just that I use the period. Okay, if you take a look at the period, it's 14. Usually I like to change it to 7. Okay, but you do realize not much of a diff. Okay, 14 and 7 is really just a little bit of a personal preference, because I'm not really a very huge long-term trader, right? So I want my RSI to be a little bit more sensitive to my price, so I change it to 7. Okay, so that's all. Is the standard default RSI. Okay, so I would say RMT4 or trading platform will have this particular indicator. Okay, so you can just pull it up, change it to 7 period, and then I just use it mainly for divergence. Okay, so that's on the bigger picture on the dollar over here. Okay, if you take a look at euro, okay, therefore we are looking at a buy opportunity. Okay, big overview first on the daily chart. Okay, euro, we are kind of seeing a double bottom formation over here. Okay, we are not long-term bullish on the euro, but we are short-term bullish on the euro. Okay, so we are focusing mainly on the technical rebound. Okay, the fundamental is definitely on the downside, but short-term wise, we're looking for buy opportunity. So over here, euro has a very decent opportunity this week. Okay, we have this couple of technical patterns coming in. Okay, so this is the part where all of us are different in personality, right? Again, little tips here and there, little education, and my experience as a trader. Every one of us are different. Okay, so some of us are a little bit more what we call objective in terms of personality. Some of us are a little bit more subjective. Okay, or the better word to that is called discretionary. So what it really means is this. Okay, think of it as today, if you are engineering trained background, okay, which means maybe you study engineering, or your work relates to engineering or similar kind of industry, okay, where everything is precise and it's more like yes and no, right? Or what we call binary. It's either 1 or 0, 1 or 0, right? So if you study like computer coding, it's also similar in terms of that kind of mentality. If you are falling into that kind of category, we call it objective method of trading. Okay? So if you're someone who prefer that kind, when you develop your strategy, you need to also have those in mind when you're developing and planning your strategy or your trade plan. Okay, I'll share with you a little bit like what are some of the elements to take note of as we progress today. But let me discuss the other portion first, right? So let me write this down as well, right? So you have the objective kind of trader. Okay, then you also have what we call the discretionary trader. Okay, so discretionary trader is someone who's a little bit more comfortable with things like, artistic, right? Literature. There's no such thing as like what's right or wrong, right? But basically it's like what's your point of view, right? So usually you like to discuss and things like that. So those are the mindset of a discretionary trader. Okay, and today if you talk about price action or candlestick pattern, it's a little bit more discretionary, right? Because it's not like straightforward. It's not like 1 or 0. Okay, it's not like 1 + 1 = 2. It can be like, hey, this looks like this, but at the same time it looks something else, right? So that's what we call discretionary. Now today, when I share with you this, I want you to be aware. You need to position yourself in understanding, are you more aligned towards objective, or are you more aligned towards discretionary? It's not, it's not like one or the other. It's more like a scale. Okay, so if you think of it like this side of it is objective, okay, the other side of it is discretionary. Okay, it's a scale, right? So maybe here is like one end of the spectrum towards the other end, and then this is like the middle point. You need to be aware and identify for yourself, which scale are you at? Okay, are you nearer towards the extreme of objective of, or maybe here, or are you maybe like somewhere here? Okay, now why is this important? Because when you study strategies, when you study, the method to analyze and trade the market, you need to be aware where you are as an individual, so that when you develop that trade plan, it fits into your style, right? So I give you an example where things are not fitted to you as an individual. Okay, so let's say you are someone who is super objective. Okay, so you are like 1 + 1 = 2. And I want to know the answer. This and this should be this. Okay, usually that's very, very objective. So if today I share with you a strategy that is discretionary, like look at price action when you see a pin bar, okay, that's a rejection pattern. Then you will be like, but what exactly is a pin bar? Then I tell you, this is a pin bar. Okay, then I tell you, this one here looks also like a pin bar. But then if you're super objective, right, what will you be thinking? You'll be like, but this and this looks different. What exactly is a pin bar? So you'll be struggling on that. Okay. So I hope you can see, right, why is it important to identify yourself at this spectrum. Now, why today I want to talk about this is because every strategy and method eventually will have a combination of a little bit of discretionary element as well as objective element. Okay, that's where the fine-tuning of strategy to fit into your personality is super important. Okay, so give you an example. Okay, now if I say this is a double bottom formation, okay, there is the technicality of being very objective, which means that you need to then define, right, what exactly is the double bottom. So maybe it's more like you have the first bottom and the second bottom over here. The price cannot close below this bottom, right? So objectively, you are defining what's a double bottom. Okay. For someone who is discretionary, you don't need all those definitions. You just say, this looks double bottom. It's a double bottom. Okay. So I hope you can understand that. Okay. And as you progress as a trader today, I would strongly encourage, okay, to look back into your strategy, look back into your trade plan. Do you have any elements that fits into your personality, or any elements that does not really fit into your style? Okay, so that's the idea of it. Okay, and if today you look at this, right, and when I say, okay, this is a double bottom formation and we have this very strong impulse push, so this is again a discretionary element, because what is an impulse? Impulse is being defined as a move that has strong momentum. So I'm a very visual person, right? So this looks very obvious to me that the market bounced off very strongly. This down move looks very obvious to me that it's coming down very fast. Okay, so this is an impulse move to me. This here is also an impulse move to me. But that's where the discretionary comes in. Okay, so if today you're very objective, you'll be asking, but how exactly do I know if that's a strong move? Okay, and that's where you need to add in elements on defining it. Okay, maybe you want to define it by, the bar, the body of the candle needs to be huge and things like that. Okay, so I won't go into details of that because everyone is different, but I want to share with you an example of same thing when we talk about impulse move. Depending on where you are as an individual, you need to fine-tune that to fit into your style. Okay, so I hope so far you guys are following me, right? And this is important because it really boils down and drill down into constructing your own trading plan. Okay, so back to the analysis on euro dollar. Yeah, okay, so euro dollar over here, there are a few what we call technical points where if today you are a very objective person, this approach might help. Okay, so what are technical points is maybe you define your strategy and say that I need to get, if let's say I want to at least have 5 technical points in order to be like consider a perfect trade that I will consider taking. Okay, and maybe what you can say, if I today have 3 out of the 5 points, it's a valid trade. Okay, so you consider trading it. But if we only have like 2 or 1 point out of 5, then it's a lousy trade that I would not take it. Okay, so you can see what I'm doing here, right? I'm being objective in the strategy, right, by giving it like 5 points. Okay, so maybe one way to look out of it is today we are looking to buy the euro dollar. Okay, so one point comes from maybe I see a double bottom. Okay, so that's one technical point. Okay, so let me put this in, right? So maybe one, we have a double bottom. Okay, and then next from here, what do I see? I see maybe a very strong rejection, which is what we call an impulse move to the upside, right? So maybe my second technical point over here is an up impulse move. Okay, and from there, maybe what I need to look out for next is I want to see if this continue to form into a consolidation, okay, which is what we call a correction. So maybe that's one of the technical point. Okay, correction forming. Okay. And then of course, if today you use a little bit of indicators here and there, I'm not, okay, but I'm just giving you example and say that, okay, maybe your one of the technical indicators you want to look out for is RSI must be above 50. Okay, so as of now it's above 50, but maybe when you want to execute your trade, one of the condition and criteria maybe you add it in is, RSI must be above 50 before I look to buy. Okay, so this is where I want to give you example, right? Concrete example of what I mean by technical points. Okay, now I did this in the past when I was studying trading. I was still learning, right, the whole process of it. I was once very, very objective. Okay, so one means one, two means two, and there's strength to that kind of technique, but of course there's also that limitation of it. Today I'm a little bit more of a mix between discretionary and being objective. Now my entry is always very objective, okay, but my analysis is a little bit towards the discretionary element. Okay, so I hope you appreciate this whole process, right? Very important. Okay, so now euro dollar over here, what I'm seeing right now is again we have that double bottom. Okay, we have the impulse push, and I'm seeing right now this seems to be coming down as a 1, 2, 3. Okay, which might form into what we know as a flag. So this is the discretionary element of the analysis, right? So when we get a pattern like that, a strong move up followed by a 3-wave pullback, usually this tells me the probability of the market continue to the upside is significantly higher. Okay, so this gives me an idea that I can start to look for buy setup. Okay, so the next question is, if today I have a couple of things telling me upside probability is quite high, I want to look for the buy, how do I set this trade up, right? So this is the part where I'm starting to be a little bit more objective, and that's the reason why I use fibs. Okay, because Fibonacci is very objective. It tells you precisely which level you want to look out for. Now in this case here, because we're expecting a 1, 2, 3 3-wave pullback, I'm going to use this fib here called the Fibonacci extension, and we're going to just basically measure from the start of the first move to the end of the first move to the end of the second move. Okay, and you kind of see a little bit of a Fibonacci area over here. What they really mean is that this 100% essentially means if I take from the high, the low of this mark, and I duplicate this length, okay, and I put it over here on the end of the second mark, I'm just basically measuring the equal move of that. Okay, so that's where the 100% really is. 123.6 is basically I add in another 23.6% of this entire move. Okay, so the objective part of me is where if today I see a 3-wave pullback, I want to be very precise in terms of my entry price. Okay, so that's why I use the fib, right? And the fib tells me that, okay, this is the price that I'm gonna look for a potential entry, and 1618 is where I'm gonna put my stop loss. Okay, which is also good because you can see this 1618 is actually below the double bottom, right? So the double bottom can potentially protect my buy trade as well in the event if the market is a little bit more volatile, and let's say it comes down here, it gets involved in it, but it did not really straight away bounce up, and this just comes down a little bit, retest, maybe triple bottom before it goes, then the stop loss below that double bottom kind of put it quite nicely there as well. Okay, so you can see that's where the discretionary element of my analysis combined with a very objective way of looking at entry. Okay, so I'm explaining this in great detail for you guys is so that you can appreciate every element of it. Okay, and of course I don't expect all of you to go and duplicate it, copy 100% because all of us are different. Okay, but through the explanation, I hope you can see, right, which part you probably need to fine tune a bit. So if I put all this in here, right, you can see something like that, okay, where we can't expect this to come down a little bit more, and then this will be the area to look for a buy. Okay, that would be around 1.0425. Okay, and the 1618 would be somewhere around 1.0325. So it's about 100 pips. Okay, that range here is about 100 pips. And where would I put my target on this potential trade is somewhere around at the previous high. So again, a little bit of discretionary, right? Some people might take it very accurate and precise at that exactly the top. For me, there are a couple of tests here, so roughly I'll just take it there. That would put me around 1.0750. Okay, so again, this is how I want you to be able to see the entire process, okay, that goes through in my mind as I share with you, right? So things to consider also, of course, I always look out for, is this trade worth taking, right? Because I need to understand not all trade is gonna be winning. Okay, some's gonna win, some's gonna lose. But at the end of the day, couple of things that's gonna be important in your overall profitable strategy is how accurate it is. When you're winning, how much can you win? When you're losing, how much are you losing? So if you have all this in control, then you would have a certain edge over the market, and then you will be confident with your strategy. Okay, so I know my strategy over here, accuracy again is not like 80-90%. To date, if you ask me, is there a strategy that consistently yield 80-90%? Very, very difficult unless you are like super experienced and you are monitoring the market all the time, go in, get out, maybe you can hit, right? But for me, anything that is actually net profitable is great. Now, a lot of traders think that to be profitable in the market, you need to win more times than you lose. That's not the true understanding of it. Okay, because if today I show you, right, if today we take 10 trades as a sample, okay, and all I did was I win 3 trades only. Okay, a lot of people would say, wow, only 30% accuracy, how can you make money? But they don't fully understand this picture, right? Because 3 wins out of 10, if you set it up correctly, you can actually be profitable. Okay, let me show you this, right? The risk reward ratio over here is about 3.3. Okay, it's about 3.3. So let's say, we average up a little bit because some trade might be 4 or 5, right? So let's just say hypothetically it's about maybe 4. Okay, that means 4x. Every 1% you risk, you potentially can win 4%. Okay, so now let's say based on just a 30% accuracy, okay, every win you win 4x. This is gonna give you 12x. Okay, so you can follow me through, right? But if today you lose 1x because you control your risk, right? Every loss you only lose 1%. Okay, so total here you lose 7x. Now if you do this math, you net it off, you still get a 5x return. Okay, now even if today you don't have 4x, you only get 3x. This is 9x, and then net you still get 2x. So in total you are profitable by about 2 to 5x. Okay, and that's where I want you to be able to see, even with a 30% winning rate, okay, with the right setup, you can be profitable. Okay, and as a trader, you want to have this understanding. Okay, so over here, this is the part where I ask myself, right, is this trade worth taking? Now if today, my stop loss is like super wide, right, or let's say today my entry is here, my stop loss is at the bottom, and then my target is only here, then this trade might not be worth it, right? Because if you take a look at it, the risk to reward ratio is 0.8, which means if I risk 1%, I potentially only make back 0.8%. Okay, so this tells me maybe it's not worth it. Okay? So as you take a trade, you also need to understand and ask yourself this question: is this risk worth taking? Okay, so this is the euro dollar setup that I have, okay, for this week. Given the condition is that this comes down here, retest, this would be the zone to look out for a potential buy within the week. Okay. Jason asks, almost reach a 50% fit level, can I sell now? Okay, some of you again would be a bit more aggressive in selling this move on euro dollar. You need to be clear, okay, in terms of your strategy. What are the reason to sell it? Okay, so I think this is also important, so I'll spend a little bit of time to talk about it. Okay, just now we talked about actually we talked about it already, right? Just now we talked about technical points, right, where you need to have certain criteria to kind of like tell yourself, okay, yes, I can take this trade. Okay, so if today, for example, in Jason's case over here, right, he's asking, can I sell it? Okay, so the part here is I can't give you an answer whether to yes or no because I don't know your full strategy. Okay, and if today, you know, any of you says, oh, but Kayong, I don't have a strategy, right? I'm just interested in trading, and just let me know, right? Buy or sell, okay? Then that becomes very dangerous, okay? Because when I tell you to buy, I know why I'm buying, okay? I have a certain conviction level, but maybe you don't understand, and then you just follow blindly. And if the trade don't work out, then you are greatly affected, right? Same thing if I tell you sell, okay? I know why I'm doing it, but if you don't, then it becomes the same case, right? Same situation where you're basically blindly doing it, okay? So that's why I usually don't, you know, even in like sessions like that, right, where we talk about ideas, when we share about trading potential, I go that extra amount to explain this whole thing because I feel that as traders, it's very important for you to understand the reason, the thought process, as we look into a trade. Okay, and the ideal picture here is you pick up all these things and then you apply on your own trading as well. Okay, so the idea here is you need to be very clear, like if today you want to sell this down, okay, why are you selling it? Okay, I don't know, I mean, if I'm the one doing it, I'll probably need to go to a lower time frame and see if there's any reason that I want to take the sell. Okay, maybe if you're looking at the lower 1 hour 30-minute, maybe you start to see, okay, maybe this can be a potential topish formation. Okay, and if today if I'm the one that's gonna sell, I want to wait for at least, you know, some kind of potential move like that. Okay, maybe I'll even go to the extent of a 30-minute and I want to see, okay, the market is doing a little bit of a reversal right now. There's a little bit of a consolidation. If this continue consolidate, I can look to sell at the break. Maybe my stop loss put here, my target put at where my larger time frame buy area. Then I ask myself the same question: is the risk worth the potential reward? Okay, so again, all these are important, and these are all the foundation building blocks of a strategy. Okay, so you need all this in place for yourself. Okay, yeah. So that's on euro dollar. Okay, I think that's the setup that I think it's worth considering. Okay, very similar here actually is the pound dollar. Euro and pound, they're kind of like correlated. Okay, not all the time, but kind of correlated. So you can see pound dollar, in a way, we have this strong rejection as well, and this currently seems to be doing a little bit of a three-wave pullback as well, where we can look for the buy over here. And for some of you who are more experienced in pattern, maybe you want to see this as a potential inverse head and shoulder as well for the upside. So similar case, okay, so we're not gonna spend too much time on this as well, but euro dollar, pound dollar, kind of similar. Okay, so if you put in your fibs, you can't get that area to look up for a potential buy as well. Okay, that's on the pound dollar. Okay, Aussie dollar over here as well. Okay, so Aussie dollar is where I think let me see which is clearer to share with you first. Okay, let's talk about Kiwi dollar. Okay, again, Aussie dollar, Kiwi dollar, quite similar. So I'll focus a bit more on Kiwi dollar because it's clearer and it's easier for all of you. Okay, so same thing over here. You can see from this time frame we have a little bit of a double bottom. Okay, it's quite similar to euro. We have a strong push, and then right now seems to be forming this little flat, right? So again, it's a pattern to look for buy. Now, this is where I'm using pattern, which is a little bit more discretionary. Okay, so in this case on Kiwi dollar, I'm going to share with you a very objective way of analyzing. Okay, and for those of you who love being very objective, I would suggest you might want to go and study a little bit more about harmonic patterns. Okay, because harmonic patterns has a very fixed set of rules and criteria to analyze and trade the market. Okay, so it's like almost to the extreme end of being objective. Okay, there's no guesswork one. Yes, yes, no means no. Okay, so a harmonic pattern, there are many different kinds. You have like Gartley, bat, butterfly, etc., etc. Okay, now today I'm just gonna share with you one in the context of Kiwi dollar. Okay, for those of you who are interested in this, you can go and study this indicator as well to support your analysis of harmonic pattern. Okay, it's called fractals. Okay, again, it's a very common indicator that's available on all different platforms. Okay, so let me share with you first without the indicator. If you have a little bit of experience in the market, okay, what we are essentially looking out for is significant lows and significant highs and significant turning points. Okay, so in this case here, I don't really need that indicator to help me, but if you're new, you can add in, just like I call share view Williams fractal. You add in the indicator, then it will help you pinpoint all the significant turning points. Okay, so what we are looking out for in terms of harmonic pattern is we need to have at least 1, 2, 3, 4 points, and we're anticipating the fifth point. Okay, the fifth point is not a guesswork, but is again very, very objective in defining. Okay, but right now you can see from this chart we have 1 point here, very, very obvious, 1 point here, 1 point here, and then of course this point, right? This point or this point is basically the same. So what we have is 1, 2, 3, 4. 4 points is all we need. Now once we have that, okay, what we then do is we take a Fibonacci tool, we pull it from the first point to the second point. Okay, and of course you have all the different layers of fibs coming in. Okay, something like that. But today I don't want to confuse you with all that, right? So we keep it to like 50 and 618. Okay, so what we are doing right now is being very objective. Okay, we pull from the first point to the second point, and we want to observe the third point touches which Fibonacci level. Now in this case here, you can see it touches the 618, right? I'm gonna add in the 786 for you to see. It did not touch the 786, right? So what it did is only touching the 618. Okay, and this is the first condition, right? Very objective, no guesswork. Did it touch? It touched 618. Answer yes. Okay. Second criteria, also very objective. Okay, did the fourth point cross the first and second? No, it did not. Okay, so valid, very objective, yes or no answer. Okay, the third point over here is basically once you identify the first and the second criteria are being fulfilled, then you know, okay, it touches the 618. This is what we call a Gartley pattern. Okay, so the third condition is find out where the fifth point is gonna be completed with high probability. Okay, so no guesswork, don't need to guess, it's very precise. If the pattern that we're studying right now touches 618, okay, the completion we're gonna expect is at 786, which is roughly where we are drawing that. Okay, so this pattern is what we call a Gartley pattern, right? It's gonna look something like that. And once we are able to find out the pattern over here, which we have a valid one, this pattern suggests that you want to look for a buy. Okay, when the pattern completes at the 786, you look for a buy, and then this is the trade that you can look out for. Okay, so again, there's no guesswork, right? Everything is very precise. If you follow me through, every condition is, it needs to hit this, yes or no. It hits this, yes or no, right? So it becomes very objective and binary. And how do we put our stop loss? We usually like to put it just below that very first point. So the fit that we use is 113. Okay, so again, no guesswork, right? We just take that level, that's where our stop loss is going to be. So if you take a look at this, the entry is 6240. Okay, I'll just round up to nice numbers, right? This becomes 6170. Okay, that's where your entry, your stop loss is going to be. In terms of target, if you're very objective, you're going to take Fibonacci as a guideline over here as well. Okay, and you can use the 618 as your take profit. Okay, so maybe your take profit, if you're very objective in nature, you want to just put it there, okay, which is going to be 6335. Okay, of course you can have multiple targets, right? You can like aim for TP1, here maybe TP2, and etc. Okay, I just want to be sharing with you a very objective way of analyzing and executing a trade, right? And this is what we call harmonic patterns. Okay, so for those of you who are interested in this style, you can go and study a little bit more. Okay, so this is on Kiwi dollar. Okay, again, this is the buy zone, this is the stop loss, this is the take profit. Okay, this pattern is what we call Gatli. Okay, so again, you realize, right? One chart, okay, can be actually viewed and look at or even analyze in many different methods. Okay, and all of these methods has its own strength and weaknesses, right? There's no need to like which one is more profitable. At the end of the day, you need to use one strategy that fits your style. Okay, if today you are very objective, this technique fits your personality. If today you are a little bit more towards a discretionary element, then patterns, like the visual patterns of it, fits you a little bit more. Yeah, so I hope it clears. So Kiwi dollar, definitely you want to take a look at it. I do have Aussie dollar here as well, but as I mentioned, the New Zealand dollar is actually a little bit cleaner. It's a little bit easier to be identified, right? This is another pattern. Okay, so another harmonic pattern. This is actually called butterfly, but this is a little bit more complex. So I would suggest for now, focus on the Kiwi dollar side of things. Okay, so we have like the major pairs, couple of opportunities you definitely want to keep an eye on. Another one is the dollar franc. Okay, so you can see over here, same thing. We have a little bit of a double top formation. We have a very strong rejection, and then right now it's doing a little bit of a consolidation, right? If you followed last week, we mentioned forecasting, right? So we want to be visualizing what we want in anticipation of what the market eventually will do, and if it follows according what we want, we have a solid trade. Okay, so as of right now over here, this is another opportunity, because if this were to continue to consolidate a little bit, okay, I would give it one more day. So by tomorrow around London session, if you see it doing this pattern, just a consolidation, you have a solid trade opportunity to look for the sell. Your stop loss can just put above the consolidation of the highs, and then you go to the higher time frame. Okay, and what you can do is you can look for it to break this, and your target can place it somewhere at the previous resistance zone over here, right? So this is not your target, but it's at the bottom over there. Okay, so if you put this will be somewhere around 9425 as your first target. Okay, the breakout point can be somewhere around 615, right? 9615, and your stop loss, rough estimation for now, because the high has yet to be established, can be somewhere around 740. Okay, 9740. So going down to lower time frame, this is how the trade looks like. Okay, I think dollar franc, definitely you want to keep an eye on it. Okay, so some of these dollars over here, remember at the very start I mentioned that if The equities are going to bounce off a little bit. We're going to see the yen weakening. Okay, if you take a look at it today, a lot of the yens are actually moving higher. Okay, that might be the sign in which, okay, Aussie and Kiwi not really, but Euro and dollar yen, you can really see it moves, right, in terms of the yen weakness. Okay, so again, this is just an illustration of understanding that intermarket analysis can add another element to your trading. Okay, so those are the few opportunities that I've highlighted. Euro dollar over here as well. Okay, I see June is asking about gold. Sorry, XAG. Okay, we'll look at commodities in a while. Let's complete the FX side of things first, right? Over here we do have Aussie, New Zealand as well. Okay. Now this is another strategy that I'm not sure if you guys are aware. It's called 2618. It's nothing fanciful, but what 2618 really means is double top, double bottom, 618 Fibonacci. Okay, so Aussie New Zealand is a very classic example of this technique. What we see here is a double top, right? And the condition is that the price needs to break the neckline of that double top, which it did. Okay, and what you do is you put fib from the swing high to the swing low, and essentially you're waiting for this to pull back towards the 618 to take the sell trade, right? So that's why the name 2618, because double top, double bottom, 618 Fibonacci. So Aussie New Zealand is a classic example of that being potentially setting up. Okay, so this is again a very objective strategy for those of you who are interested. Basically, search out for double top or double bottom, wait for price to break the neckline, pull in your fib, swing high, swing low, wait for the 618 Fibonacci retracement. Your stop loss will be placed at the top, okay, and your take profit TP1 can be placed at the recent low here. Okay, so in this case here, if you're looking at Kiwi dollar, that will put you somewhere around 1090 as your entry zone. The stop loss is above that previous high, so that will put you at 1170. Okay, your TP1 will set you up at 60965. Okay, so this strategy, your risk reward is just about 1 plus ish, right? So it's slightly more than 1. You can see here, right, 1.6. So essentially, if today your strategy of this 2618 has a 50% accuracy, you're going to be profitable. Okay, because every time you win more than you lose, right? So as long as your accuracy is about 50%, you're making money already. Okay, so just want to highlight on this also, and the opportunity to share with you this strategy called 2618. Okay, great. So FX side of things mainly are those. Euro New Zealand is not the best, so I don't want to spend too much time to talk about it. Probably don't want to focus on it too much as well. Same thing in Aussie CAD. So I think we'll take this out of the list, and primarily a lot of major pairs and Aussie New Zealand as the 2618. Okay, so let's take a look at the commodities as June here also asked for silver, so we're going to look at silver first, then gold. Okay, silver over here, if you look at it from I always look at the daily first, right? Now in this case here, we can see that we do have a little bit break of this significant level, but to me it's still within the zone. Okay, maybe what we call a bear trap, right? Fake breakout. Potentially that might be the case. So I would suggest, if you're looking at silver right now, the bias, the direction you want to focus on remains upside for now. Okay, until something else happens, right? But for now, I would still prefer to focus on buy. Okay, so that's on the higher time frame. Now if you go down to the 4-hour, okay, we need to build a case to why and where we can potentially buy, right? So in this case here, again, depending on how strict how objective you're gonna be. Some of you might consider this as a bottoming formation, and then you have this very nice bounce. Maybe this is consolidating and then you want to start look for buy already. Some of you might be a little bit more objective and say that, yeah, but market hasn't really tested the bottom over here. I'll be patient. Maybe this will come back down first, then the upside. Okay. To be honest, nobody will know exactly what will happen. I don't. Okay, no traders will know. Okay, so that's why I say you always focus on what we call probability, right? Okay, you don't need to be right all the time, but as long as you're profitable, it's fine. Okay, so silver, how I'm going to look at it right now is, to be honest, I'll be a little bit more conservative at this moment, but I'm going to be still bullish on it. Okay, now when I mean conservative means I would want to see if this really come back and retest the previous low, and I'll be more keen to be looking for buy opportunities at the bottom. However, if the market doesn't come down and you just decide to take off, what I want to see is first it clears off this previous high, which is around 2245 area. So if it wants to take off, I want to see it breaks the clear previous top first, does a little bit of a consolidation, then I will be buying here, or I'll be buying here, right? So in this case here, as long as the market is still stuck somewhere around the middle portion, personally, I won't be trading yet. Okay, but of course, this is again my style, right? That's where I'm sharing with you why. Okay, so I hope that's clear. Okay, on in terms of like silver, right? I hope that's clear. Okay, let's take a look at gold as well. Okay, I think more or less gonna be similar in itself, right? I see the pattern on gold and silver is more or less the same. We have this bottom, we have that high. Okay, so same thing for me. If you're looking at gold, my view is still the same, right? It's currently right now in a consolidation. It's like in the middle. I always say this is like no man's land. You don't want to be trading it yet. Either for me, I'll wait for it at bottom, or I'll wait for it to break above, does a consolidation, and then that's the area to look out for it. Okay, so that's on gold and silver. Crude oil has been coming down. I'm not sure if you still remember, I mentioned this in one of the sharing as well. I think like some time back. I don't think it's last Friday. But if you still recall, we talk about always asking yourself how is the price developing. Okay, and you take a look at oil here, right? This was drawn some time back, and we talk about how, as it's going up, it's not going up very impulsive. Okay, it's corrective in nature. There's a lot of overlap. Okay, it goes up, it comes down quite a bit, it goes up, it comes down quite a bit. That's what we mean by overlap. So whenever you see the market move in this kind of manner, it's not very sustainable. Okay, and at one point in time, you want to be looking at the reversal instead. Okay, so when oil started reversing recently, to be frank, it's not surprising because it's something that we are in anticipation of because of that development, right? So again, this kind of pattern, you want to be familiar with it because it tends to happen over and over again. Okay, so the next time you see something like that, okay, So oil right now, I would say you want to be a little bit more on the bearish side. Again, nothing's 100%, but I would say high probability, and I'm not going to be surprised if oil come back and retest the bottom, which is around the 94.20 there. Can this happen? Yeah, right. Very, very possible. And the idea here is, again, if you understand the whole mechanics of what's happening globally right now, we are having a super high inflation rate is because the prices of commodities and energy is very high because of supply chain effect. Okay, we have Russia-Ukraine conflict affecting supply. We have COVID affecting supply. We have like China still basically in a lockdown affecting supply. And because of that supply issue, prices are very, very high. Okay, so things can start to turn a little bit, and this is where, if you understand intermarket analysis, is important, because if oil were to start to come back down towards 94.20, very high possibility inflation is going to drop. Okay? And it is going to have a multiple of effect in the financial market, because if oil drops, inflation drops, central banks are no longer that hawkish, it's going to affect the equities market, and then you will have a chain effect, right? Equities market starts to bounce up, and then you have like currencies being affected and things like that. And then from a fundamental point of view, because inflation is now slowing down, the Fed doesn't need to be hiking rates so aggressively anymore and things like that. Okay, so even if you're not trading on crude oil, understanding all this can give you a broader understanding and appreciation of the market also. Okay, so my view on oil is downwards bearish for now. That's the direction I would suggest to focus on. I personally don't trade crude oil, but from an analysis perspective, there's a good possibility we can see crude oil come back down towards 94.20. Okay, so to set up a potential trade, again, you need to have the strategy. But for me, at least the minimum I want to see is this do a 3-wave pullback. Okay, so I think you guys should be starting to be familiar what I need to see in order to take a sell, right? Okay, so that's my view on crude oil. Hopefully that helps. Okay. Steven here asks, may I know why the yen so weak? Is there any special reason? I was supposed to do a public sharing with one of the organizer called Brokers Show, but it was cancelled because suddenly they have some technical issue, right? I prepared the sharing talking about macro trades for 2022. Okay. We might not have the time to go into details of that today, but I'm not sure when they're gonna have that, sharing again once their website platform is stable. I might do a sharing with you guys over here on Thursday first with regards to that content, because I feel that as traders, it's important to understand some of all these things that are affecting the market right now. Okay, and this is what we call macro analysis, or whatever name you want to give it, macro trend. Okay, and inside, once you understand the whole picture of macro analysis, you start to understand a little bit more in terms of what's happening in Japan, and potentially what's gonna happen in Europe. Okay, because of its fundamental policies, right? Monetary policies. So yeah, I mean, Japan right now is doing this thing called yield curve control, right? I'm not sure if you're familiar with this thing called YCC policy, which is essentially the central bank of Japan says that we're gonna limit the yield curve at a certain band, right? And if the curve goes a little bit too high, they're going to bring it down. If it goes a little bit too low, they're going to bring it up. And how they do that is by printing money. Okay, so that's why you realize that Japan currently is in an economic state called stagflation, where the central bank is doing what we call easing policy, very low interest rate, prints money, trying to stimulate the economy, but the economy in Japan is not really picking up as it should be, right? So that is what we call stagflation. It's not moving, okay? But the central bank is really doing a lot, like lowering interest rate, going to negative rates, printing a lot of money and things like that. And essentially, they have this term called unlimited printing, right? Because they want to control that yield curve. Okay. Now when I share about this, one potential huge macro trend play you want to keep an eye on is at some point in time they cannot defend this YCC policy anymore. Is if you still remember, last time the euro and the Swiss franc is pegged. Okay, so they have a bandwidth, right? Every time euro franc drop towards a certain floor, the SNB will come in and push it back up. Okay, and then at some point in time, it doesn't make sense to control that anymore, right? And then SNB did something called I don't want to defend it anymore. And then back then we have what we call the Swiss franc crisis. Okay, at one point in time in the future, honestly I don't know when, but start keeping a close watch. Bank of Japan might need to abandon this YCC policy. Okay, why? Maybe it's because right now again inflation and all the different fundamentals shift from different central banks are affecting the Japanese yen. Okay, so there's a good possibility in the near term we might see Bank of Japan abandon that. Now, you then need to also understand, if a central bank abandon its policy, it loses a lot of credibility in that short period of time. So when they announced the abandonment of YCC policy, Japanese yen, I strongly believe, might be weakened further. Okay, because people start to lose faith, and Bank of Japan starts to lose its credibility, right? No trust, don't know you can trust them anymore and things like that. So people would dump the yen. Okay, so that's that psychological impact, right? So do keep an eye on that. For the yens, of course nothing is 100% because there's so many factors that can affect the market, but this is one of the macro trend that I'm identifying. I don't know when it's gonna happen, but if it happens, you want to be prepared to capitalize on that as well. Okay, so Japan is showing a little bit of sign of cracking because of its YCC policy. The other is actually the euro, right? Which we might see that how euro work right now is so many countries within the eurozone. Some countries are doing badly, some countries are okay, but they don't have their individual central banks to help them because it's controlled under ECB. Okay, so another very complex part. Italy might be the first country. It's not the first. Okay, Greece did that in the past. But Italy might be at the brink of defaulting in euro. Okay, and that might be a spiral effect again, and that might have an impact in the euro, as well as the indices related to euro like German DAX. Okay, so that's another macro play that I'm monitoring. So for some of you are interested, do keep an eye on that as well. Okay, if you don't trade the DAX, then focus on the euro currency. Okay, right now the clearest play to monitor for this macro trend is euro dollar, because the fundamental policy is very clear. Okay, the Fed, the dollar is hiking, but the euro is not. Okay, and if let's say eurozone starts to crack with the first sign from Italy, then euro will crumble and then the dollar will remain strong, and then euro dollar would have a very nice trend. Okay, if you take a look at euro dollar from a monthly time frame perspective, what is really supporting it right now is this floor. Okay, so from a macro perspective, if that floor is broken for whatever reason or catalyst that might kick in, maybe really Italy default, the whole euro collapse, then this can be the catalyst to push the euro down, dollar down towards like 0.8350. Okay, so these are what we call macro trend. Okay, so hopefully a little bit of all this explanation help you understand from if we started with the question on Japan yen, right? But yeah, that opens up the whole understanding of macro, the policies that some of these banks are doing, and therefore why the currency will have a certain impact. Okay, so I hope that helps. If it's a little bit confusing, don't stress yourself up as well, because it takes time to really also go and study what we call macro, right? It's another understanding of the financial market itself, compared to just the technical and the basic fundamental. Okay, yeah, so that's all from my side. I hope that's clear. Okay, very quickly, I think I forget to touch on Bitcoin. But very quickly, for me, I would still say the same thing as last week. I don't think cryptocurrency is the best time to be looking at right now. This drop is not small. Okay, how far Bitcoin can drop, I don't know. I don't think any trader will know. But from a technical point of view, this is where the previous kind of resistance is. Yeah, but I would just say if you sell it now, might not be the best time also, because it's going to be very volatile. This can just bounce back and retest before maybe continuing. You want to buy, it's not the best time to buy also because of this, bearish momentum. So the best thing to do right now, if you're looking at crypto, is just stay away from it for now. Give it some time and then come back, later part when things starts to settle down a little bit more. Okay, so that's my view on the crypto scene lah. Good. Okay, so I hope that's all from me. I hope it's clear. I hope you guys pick up a lot of things from today's sharing. Okay. Yeah, so all the best for those of you who are actively trading the market as well. Some of this setup that I talk about might happen maybe tomorrow before Thursday's session. But as usual on Thursday we'll come back and take a look at that. And if let's say Thursday there's not much of a new trade opportunities or not much of an update, because like this week the market is generally quiet, I might spend a bit time to share with you the content that I've prepared for the macro trends, right? So you can appreciate a bit more about macro analysis as well. Okay, so yep, that's all from me. We overextended a little bit, but it's fine. Hopefully you guys are fine as well. So yep, that's all, and see you guys again on Thursday. Okay, so see you guys. Bye bye.